lies, damn lies, and statistics. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. That famous saying was uttered by American author and humorist Samuel Clemens, better known to us as Mark Twain. Now, that feeling perfectly encapsulates the economic and investing environment that we find ourselves in contemporarily. Well, let's take a quick review of where we've been, where we're at, and where I think we're headed. All right. So we are in the first week of August 2022. Now, last week, the economy created a staggering, really, 500,000 new jobs for the month of July. Now, that came merely a week after economic reports say that the economy actually shrank about 1% in the second quarter of this year. Now, that adds on to another more minuscule shrinkage in the economy in the first quarter of this year. Now, the two back-to-back quarters of economic shrinkage would technically qualify as a recession. Now, there is no way, however, this economy can be in recession at the same time it's creating 500,000 net new jobs. It's just, no, sir. It just doesn't work like that. In addition, the overall unemployment rate, which one would expect to rise during recessionary period, has in fact been going down. And in fact, it's down to a near 50-year low at 3.5%. So, question, what is going on here? Well, obviously, the economy had taken a bit of a body blow from the very high fuel prices caused mostly by the Russian invasion of Ukraine and the economic sanctions that were put on Russia, which is a major fuel and energy provider for the world. And that drove the price of oil up to about $120 a barrel, that being in late June. That has since come down dramatically as of this date. And I believe that the market is seeing it, seeing into the future. They see the price of oil continuing to fall. In fact, there is actually quite a bit of wisdom and, shall we say, far-sighted knowledge in what has happened in the financial markets over the last 3 weeks. So, since the market nadir in the first week or so of July of 2022, the financial markets have moved up very, very strongly, right? And in fact, depending upon which kind of stocks you own, you're up anywhere from 8 to 12%. That's a very, very strong move in a very short period of time. Now, why, if in fact the economy is shrinking, would the markets be moving up so strongly? And how would the markets be moving up strongly if in fact the Federal Reserve continues to raise interest rates and inflation continues to hover around double digits? Well, it comes basically down to this. The financial markets are forward-sighted instruments. They are not really looking at where we have been or even where we are at contemporarily. They're looking 6 months, a year into the future. So what do they see 6 months or a year into the future? Well, it goes something like this. They see the price of fuel, as I mentioned, continuing to fall, right? So going from $120 a barrel down to, well, who knows how low. The Biden administration, I believe, really would love to see the price of oil in the $50 to $60 a barrel range. That would achieve two very critical functions for the Biden administration. It would, first of all, be a major blunt against inflation, because so much of the cost of everything that we consume, from food to merchandise, basically anything that has to be moved, the cost of fuel is figured into that. Thus, if you can cut the price of fuel in half, you can dramatically reduce the prices on just about everything. That's number one. Number two is, again, this thing in Ukraine. So the Russian economy is heavily based, their hard currency sales are heavily based on energy and oil and gas in particular. Coal too, but oil and gas in particular. So if the price of oil can be pushed down to the $50 to $60 a barrel range, that makes this operation that they're running in Ukraine essentially prohibitively expensive. Because see, right now it's already ruinously expensive to the Russian economy and to all of the other things that they have going on over there. But they're managing with the high oil prices. You slice the price of oil in half, that this makes the war that they're perpetuating over there virtually impossible to continue. And the Biden people see this, right? And so the markets looking out into the future, they see the Biden administration, along with its Arab allies, also Canada, Mexico, all the other oil producers, basically pouring crude onto the markets to drive that price lower and hopefully bankrupt Russia by next year. So that's what the market sees, first of all. Second, they see the price of raw minerals, right? Or the raw underpinnings of the economy. We're talking metal prices. We're talking lumber prices. We're talking the aforementioned fuel prices. They see all of these things coming down dramatically. And that also will contribute to a lower rate of inflation going forward. Now, lower inflation going forward means the Federal Reserve, it takes pressure off of them to continue raising interest rates. That will allow the economy to not only stabilize, but to begin to grow smartly after that is achieved. When will that happen? Well, we don't know exactly when, but for sure, these lower commodity prices are working their way through the economic structure as we speak, right? And so lower prices will be coming later this year and next year. And the financial markets see that. They see a stabilizing of the American economy anyway. Europe and Asia, not so sure. But the American economy anyway will begin to stabilize and in fact grow, and perhaps even grow smartly. Because again, as the financial markets see it, if we're able to have a 50-year low in unemployment and create 500,000 new jobs, even with darn near double-digit inflation, imagine if you can slice the inflation rate in half, what'll happen to the economy, right? It's basically sunny skies and wine and roses at that point. And the market definitely is seeing that. And that is why the markets have moved up so strongly in the last few months. Now, can some things happen to throw this calculus off? Absolutely, right? Russia could surge in Ukraine, perhaps even cause a collapse of the Zelensky government. That's possible. I think rather unlikely at this point, but who knows, right? Or could some other calamity happen that could cause things to turn around in ways that no one expected and do a double body blow to the economy? Maybe even yet another wave of this COVID pandemic, CV-19, that could throw the economy into some kind of lockdown or something like that. Yes, that could technically happen. But what it seems like is, in the US anyway, it seems as if the governments, plural, have finally been able to get their arms around the CV-19 pandemic. Because as the variants have been moving through the populace and making a lot of people sick, the economy has been moving forward regardless, right? And that's more than you could ever hope for. And so I think that is less likely to happen. So to me anyway, I'm beginning to see things the way the markets see it. I'm beginning to become very optimistic. I see very good things happening by the end of this year and into early next year, right? And the current reflection in stock prices, the strong move up since the nadir in early July of 2022 is reflecting that. And I believe will continue to reflect that going into the late summer and fall of this year. All right. So those are my thoughts for this week. If you found them insightful or instructive, do me a huge solid. Hit that thumbs up button. I would really appreciate it. Also, leave a comment. Let me know what your thoughts are on our current economic situation. I'll respond to it. I promise you I will. I'll respond to everyone. I appreciate it. And of course, subscribe! Please, we can have a better day together once you subscribe to Invest Strong. All righty, friends. Really appreciate it. Thank you so much and good blessings.